Unlocking Market Language, The Power of Charts. And there are perspectives in there from, actual traders and experts.
Right. And our goal here really is to sift through all that and help you see how these market charts.
Well, they're not just squiggles on a screen, are they? They function more like a language.
Exactly. The sources really push this idea that learning to read this language gives you a kind of shortcut, a way to understand what's really driving those price moves, maybe before everyone else catches on.
Yeah, that's the core idea running through it all, isn't it? Charts as a visual language. And if you're following the markets, you already know things move fast. So learning this language isn't just about seeing lines.
No, it's about interpreting them.
Yeah.
It's an essential skill.
It really is. Like Ahmed Essam puts it in the source material.
Yeah.
That quote. Oh yeah, charts speak a special language. He who understands it hears the market's voice before others. Something like that.
Here's the market's voice. I like that. Because we've all seen charts, right? Price plotted over time.
Sure. Vertical axis price, horizontal axis time, basic ones.
Already seen the price tick up or down. The source material likens it to watching a silent film. You see the action, but you miss the nuance, the story.
Yeah, the why. You don't get the full tension, the narrative behind the move, unless you understand the language the chart's speaking.
So, okay, it's more than just axes. You're saying those lines, those bars,
Yeah,
they capture the behavior of millions of traders.
absolutely. They're
Yeah.
like a visual record of all that collective emotion,
Right.
fear, greed, hesitation, conviction. It's all embedded in there, driving the price.
Right, so if it's a language,
Yeah.
what are the basic words? The sources mentioned common chart types, line charts, candlestick chart. You've probably seen these.
Yeah, line charts are the simplest, just connecting the closing prices. Easy to grasp, good for a general trend overview.
Okay. And candlesticks, they're more common, right? Open, high, low,
Yeah.
close packed into one candle.
Exactly. But, for someone who already gets the basics, green candle means price closed higher, red means it closed lower. The real insight from the sources, particularly from Sarah's experience, it's about the shadows, or sometimes called wicks, those thin lines sticking out the top and bottom of the main candle body.
Ah, the shadows.
Yeah.
Okay, so they're not just decoration.
Yeah.
How do they show the struggle you mentioned?
Well, think about it. They show the absolute high and low the price hit during that time period, right? But crucially, they also show where the price didn't manage to close.
Okay.
So like a long upper shadow, it tells you buyers tried really hard. They pushed the price way up to that high point.
Right.
But by the time the period closed, sellers had pushed it back down quite a bit. It's like a visual snapshot of the bulls trying and failing within that candle's time frame.
And the opposite for a long lower shadow, sellers push down, buyers push back up.
Precisely. Buyers stepped in, rejected those lower prices. The length of that shadow, especially compared to the body and maybe other nearby shadows, it instantly tells you who had more power, who won that little battle in that specific hour or day or whatever the chart period is.
Yeah.
That's the shortcut, seeing that balance of power immediately.
That makes a lot of sense. So you go from reading these individual words, the candles, to looking at the bigger picture, the sentences or paragraphs.
Yeah,
Which is, I guess, where identifying the market trend comes in.
you got it. Identifying that dominant trend is, well, it's fundamental. It sets the context for everything else. The sources talk about the classic trends we know.
Like an uptrend.
Yeah, an uptrend, a series of higher highs and higher lows, like climbing stairs,
Yeah.
Each step up is higher than the last one.
Okay, in a downtrend.
Descending stairs, lower highs and lower lows. Price keeps making new lows, and the bounces aren't reaching the previous peaks.
And sometimes it just goes nowhere.
Right, sideways. Consolidation, price just bounces around between a defined high and low, like walking back and forth in a corridor, not really making progress up or down.
And the insight here, for someone who knows these terms, isn't just the definition, but really internalizing the importance of seeing the market's overall posture. Like, which way is the main current flowing?
Exactly. Because, look, you might see a really interesting single candle or a tiny pattern forming, but if the main trend on the daily or weekly chart is screaming downwards,
You're fighting it.
You're fighting it. You're trying to swim upstream against a really strong current. And this ties right back into the human element the sources emphasize, like that Jesse Livermore quote.
Oh yeah, the one about markets never changing.
That's the one. Markets never change. Fear, greed, hope, and speculation have not changed since people started trading. Something to that effect.
That's pretty profound, and it connects directly to the charts, doesn't it?
Yeah.
Those shadows, those trends we just talked about, they're basically the footprints of all that ongoing fear and greed and hope.
They really are. It makes the chart feel less abstract somehow, knowing that human psychology is what's drawing those patterns.
Yeah.
And understanding that leads directly into the practical advice the sources offer for actually using these charts effectively. One really strong point is starting your analysis on the bigger time frames.
Like weekly or daily charts.
Exactly. Look there first to understand that dominant current, the main story the market is telling. Get the big picture.
Before you get lost in the noise.
Precisely. Only after you've established that overall trend should you zoom into the smaller time frames, maybe the hourly or the 15-minute chart, to look for specific entry or exit points that actually align with that bigger trend.
Okay, that makes sense.
And this is where Fadi's story from the source material is such a great illustration.
Right, he was the one glued to the 5-minute charts.
Yeah, exactly. Apparently, he got really good at reading the tiny blips, the little ups and downs, the words on that super short time frame.
But he missed the bigger picture.
Totally missed it. He didn't realize the overall daily trend was moving hard against this little 5-minute trade, so he felt like he was constantly battling the market. He'd make a tiny profit, then get wiped out because the main current was just too strong.
He called it trying to swim against the current, didn't he?
Yeah. His experience really hammers home why you check that larger time frame first. It stops you from misinterpreting all that short-term noise as some kind of major signal when it's really just noise.
So it really underlines the idea that charts aren't crystal balls. They don't magically predict the future.
No, not at all. The sources are very clear on this. Charts are a tool. What they show you very clearly is what has happened.
The history.
The history. Where price went, how strongly it moved, where it stalled out, resistance, or where it found buying interest support. It's all laid out visually.
And understanding that history, those patterns of past behavior that are captured right there on the screen, that's the crucial first step, isn't it? To making an educated guess, an anticipation about what might happen next.
Exactly. It's about informed anticipation, not prediction. And the sources also point out rightly that charts are often best used with other tools.
Like technical indicators
What?
or fundamental analysis.
Yeah, things like that. They add extra layers, maybe help confirm what the chart is suggesting or provide additional context. The chart gives you the visual story. Other tools can flesh it out.
Okay, so let's sort of wrap this section up. We've taken this deep dive using your sources, looking at charts as this language that shows market psychology.
Right, understanding how even small things like candlestick shadows tell a story of buyers versus sellers.
How spotting the main trend gives you that vital context, that current you need to be aware of.
Yeah, and the practical advice, like Fadi's lesson. Start big, then zoom in. Don't swim against the tide.
And ultimately, seeing charts is a powerful tool to understand the past, which is our best guide to anticipating the potential future.
Exactly. The goal is really to move beyond just seeing lines and candles as data points and start reading the story they tell, using the insights from these traders and texts.
Right. And the material you shared kind of leaves us with a bit of a cliffhanger or maybe a pointer to the next level. It hints that once you can actually read this chart language, you need to understand the engine, the thing that's actually driving all those price movements in the first place.
Ah, yes. Supply and demand.
Exactly. The source material suggests digging into supply and demand dynamics is the next essential step, and specifically mentions how critical it is in really fast-moving markets like, say, crypto.
Well, it's the perfect next layer, isn't it? Because the chart is essentially showing you the result of that constant battle between supply and demand, moment by moment.
So understanding the forces behind supply and demand gives you insight into why the chart looks the way it does.
Precisely. It completes the picture.
Okay, so that's definitely something for you to think about. As you get better at reading the charts, start asking, what are those deeper forces, the supply and demand pressures doing behind the scenes that are creating the patterns you're seeing on the screen? A whole other level to explore.